Hi everyone. Today we will be speaking about Disney's earning report. Disney always was on my watch list and I used to own some stocks of Disney in the past and I did okay with. But since then, either their business wasn't right for me personally to buy the stock or the price of the stock mostly wasn't right for me. It was always too high a little bit. So today I would like to give you my point of view about their earnings, about what is ahead of Disney and how are they going to cope with these coronavirus problems. Based on performance of some other companies which were impacted by coronavirus before Disney was, I will try to give my forecast about Disney's second quarter and their earnings. But let's start as always with my portfolio. As you can see here, there have been some moves. I have actually sold 100 stocks of Novo Nordisk company, which brings my cash position to more than $20,000, but even with that move I managed to outperform S&P 500 in last week, as you can see on this chart. What is really impressive is that even most of my portfolio consists from cash, I'm still able to track performance of S&P 500 on the upside. And the biggest reason for that in the past week was actually Revolve. Revolve grew around 30% in last week. I have earned, I think, more than $1,000 last week only from the Revolve. Foot Locker did okay also last week, and Novo Nordisk, which I have sold, did okay too. So no matter I have almost 2/3 of my portfolio in cash, I managed last week to track upside growth of the S&P 500 with my portfolio, which made me really happy on the short term. All of that you can see even better on this return chart. You can see that this difference between my return and S&P 500 return has widened even more in the previous week. On profit chart you can see big bump because I have now earned around $2,500 in 2020. So why did I sell my Novo Nordisk stock? Just to go back in the past a little bit, I wanted to show you that I have bought Novo Nordisk stock in 2016 actually, around here, when it was 323.40 Danish kroner, which is around, I don't know, 50-60 bucks. And 1 year after that it fell from 350 to 230. But I didn't move my position, I didn't sell, I didn't do anything, because I felt all the problems that they had were short term and they will not leave long term material impact. And as you can see on this chart, I was right. Stock recovered, and recently I have sold them after the earnings near all-time high of around 440 Danish kroner, which means that in 4 years I have earned around, with dividends, 40%. Unfortunately, my Novo Nordisk investment underperformed S&P 500 in these 4 years, but at the end I had nice feeling about this investment because in these market turmoils it actually made all-time highs, because it is pharma company and it is producing insulin, and people are buying, of course, their medicine, their insulin, even in this downturn. Since its business it wasn't impacted at all, this stock didn't fall as much as most of the other stocks, and it protected my portfolio really good in these last few months. But what made me sell this company was that they shown at the quarterly earnings 16% growth in their revenue, and this was really nice. Usually in the last 2 or 3 years their revenue was growing at single digit rate, so 16% growth was really good to see. But their management forecasted for this year single digit revenue growth, which means that in the next 2 or 3 quarters their revenue growth will fall significantly. And since they rolled out their oral pill as insulin, I thought that their revenue growth will be double digit for several years in the future. Since it disappointed me, to be honest, I have sold my stocks. They were trading at near all-time high, and I felt that time was right. Now let's go to Disney's earnings. As I have told you, Disney was on my watch list for years, I think. I used to own it in 2014 or 15, I think, and I did okay. But then I have sold them because their profit margins were shrinking, and I wanted to see how is that going to play out. Since then, the price was never good for me personally to buy it again, so I kept watching it for years. And now, since their price went from 150 to 100, I have again started watching it more closely. So I wanted to discuss this quarterly earning. As you can see here, their revenue grew 21%, which is expected because now they are counting in their Fox acquisition revenue too, but I wanted to focus on profits because the profits are what is driving on the long-term price of the shares. Their profit plummeted 63% on year-on-year basis. Remember, coronavirus hit happened at the end of the quarter. Of course, they have some parks in China and in Asia, which were closed there from February, I think, but most of their business is not there, and it was impacted at the end of the second quarter for Disney. A lot of people think that Disney will thrive on their streaming services, which are now ESPN, Hulu, and Disney Plus. But if you look here, you can see that revenue from their streaming, which is direct to consumer and international segment, grew from a little bit over 1 billion to over $4 billion, which means that they almost quadrupled. But what is specific to that segment of Disney, it is not profitable, which means that the result from that revenue growth is growth in the losses that they are generating. And you can see that here in segment operating income. Losses of the streaming service went from $385 million to over $800 million. And that is also something that shouldn't surprise us, because I think that Disney is focusing on this segment for the long run, for the long term, and they are charging really low price for their subscriptions, because I think that they want to penetrate in the market and they want simply to get as many subscribers as they can. And while they are doing that, they are also building their inventory, their number of TV shows that they are offering. And once they get to, some amount of subscribers and TV shows, I think that they will start raising their price of the subscription. Another thing that Disney is doing with this is not, only about subscriptions, but they are strengthening their brand. For example, if you saw Mandalorian, that is TV show on Disney Plus, it is placed in the Star Wars universe. I think that this will only strengthen Disney's brand and Star Wars brand. And yeah, you will see the show and they will generate loss at the Disney Plus subscription, but then you might go to Disney World or Disneyland, and so you can enjoy Mandalorian rides there, and they will get some profits there. And they might also make some cartoon or movie about Star Wars, which you will want to see because of the Mandalorian TV show, just for example. So I think they are building their branding and their story around all the segments together. So it is not easy to comment only one segment, because they are impacting each other, and loss at one segment might be profit for other segment in the long run, which is really interesting and really good from my perspective. But in the short term, they are generating losses. You can also check this chart of Disney stock. It fell down after the quarterly earnings because investors were disappointed, but then in 2 days stock went from $100 to almost $110, so almost 10% growth, because Shanghai Disneyland tickets sold out for the opening day. And investors were thrilled to see Disney parks opening and stocks skyrocket. But when you dig under the surface, you can see that park usually sees around 80,000 visitors per day, but now Disney will operate at 30% capacity, or about 24,000 visitors a day. But Disney decided by itself to lower even that number of visitors. I think they have sold less than 20,000 tickets for the first day. What I am trying to say that it will take a lot of time before Disney comes back to their previous results. So it is not surprising for me that the Disney's management decided to hold all dividend payouts, so they will save up around $1.6 billion by not paying this next dividend they had to pay. I think it is semi-annual, and I really liked that approach because they are thinking about long-term value for the investors. Their balance sheet isn't so great because they have bought Fox for around 71 billion, I think, last year. So they had to take a lot of debt, and saving some money is a good thing to do right now. My forecast for the next quarter of the Disney is that they will not earn even 1 cent and they will not be profitable at all, which means that we might see some pain in the stock price, or maybe we will not. Maybe investors will look only long-term picture of the Disney, but I will be waiting for my opportunity. I'm full of cash right now, and yeah, I'm waiting for some place to deploy it. S&P 500 grew quite a lot in the last several weeks, and a lot of that happened, I think, on the hope of the people that when everything opens up, we will be back on track, back on the previous levels of business, but that will not happen. US has more than 14% unemployment rate. Even big profitable companies like Google and Facebook halted all of their hirings. Microsoft also slashed it by around 50 or 60%, I think. And we will have a lot of pain in front of us globally. For the end, I wanted to show you earnings of Wynn Resort. That is gambling company which has casinos in few cities. One of the cities is Macau in China. One is of course in Las Vegas, and one is I think in Atlantic City. So their Macau casino was closed for 2 weeks in February, and their Las Vegas and Atlantic City casinos were closed from the mid of March, as everything else in the US. And even though they opened casino at the beginning of the March in Macau, their traffic still was around 80 or 90% less than it was last year. And as you can see here, their earning per share went from 98 cents in previous year to minus $3.77 this year. And I cannot imagine what will happen with some companies and their earnings in second quarter once we see impact of this almost half of the quarter shutdown in the economy. I believe in US, I believe in all of the world. I know that everything will get back as it used to be and even better. But I think that people are undermining the impact of this coronavirus. It will take a lot longer than most of the investors are thinking based on the price of the S&P 500 right now. That is why I am 2/3 of my portfolio holding in cash, and time will tell if I was correct or I don't know, maybe I was wrong. That is also a possibility because nobody has crystal ball. Thank you for watching and see you next time.